So this one simple reason why a lot of people never become consistently profitable is basically the holy grail, and it has nothing to do with your technical analysis, but it doesn't have anything to do with your trading psychology either. This one simple tweak you can add to every position you take is going to ensure that profitability is just around the corner, and long-term consistent profitability as well. So imagine this: you sit down in front of the charts, you've been waiting for your setup patiently, and you take the setup, and the trade looks nice, everything looks nice technically, and the trade chops a bit around break even, it goes a bit against you, makes some sort of high, then it goes lower in your favor, and you see 0.5% profit, 1% profit, and you start to get excited. You get this feeling of this trade is looking good. But then something happens. It starts to retrace. It starts to go against you. That's the moment professionals and amateur traders separate, because how you handle that situation is what determines your long-term profitability. Think about it this way: you want to take money from the markets, but the markets also want to take money from you. But the way the market takes money from you is not the same way you take money from the markets. So think about yourself as like a pawn in chess. You move around, but you're playing the game, you're not controlling the game. That's what you want to avoid, because you try to take a position and get something from the market, and you get frustrated if it doesn't work, and you get excited if it works. But the market doesn't operate that way. The market isn't trying to take something from you in a logical way. The market in itself is really simple. Anyone can become profitable if they actually learn how the market works, because it's not that advanced or complicated. So the market usually does this. The market goes a bit against you, and you start to get this feeling of you should probably close the position, but you refuse to do so. So you lose more than you should because you just can't accept a smaller loss. That's one way. That you just you just watch your stop loss get taken out, and you know that the position doesn't look that good anymore. You know that you've been in the trade for, let's say, an hour, and you should just close because it didn't move in your favor yet. And another way the market does this is that it goes against you, it stops you out, but then it doesn't go that much more against you, and then it starts to move in your favor again. So you get this FOMO, you get this feeling of, oh, maybe I just placed my stop loss wrong, or maybe now the real move is going to begin. That's how the market tricks you, because the market is in full control. The market isn't impatient, and the way the market does this is it psychologically manipulates you. It gets into your mind, and it makes you question yourself, doubt yourself, and it knows that you're desperate for this win. It knows that you're desperate for money. So all it needs to do is whisper something in your ear like, are you sure you don't want to re-enter this position? Like, it could still work, and then you re-enter and you lose double up, and then it just goes straight against you. But it didn't do that first because it wanted to give you like the doubt, and to maybe give you that opportunity to get that winning trade, and then it stops you completely out. That's how the market tricks you, because it lays out bait and it tries to trap you psychologically. It doesn't beat you in actual price action, because if it would, then no one would become profitable. But the thing is, price action in itself is really simple. Let's say the market moves like this: swing high, swing low, swing high, swing low. You see the trend, you see the rhythm, and it's not that difficult to trade with that trend and position yourself in the right direction. Anyone can do that. But it's what happens when you hit stop loss or the trade doesn't work. How do you react then? That's how a lot of people lose. It's not because of technicals, it's just because they start to doubt themselves. And I always have this rule: if I have to place the stop loss too high and the risk reward is too bad, then it's probably not a good trade. So I don't take those trades. but people do that just to be sure, just to avoid getting stopped out because they just can't take it. But I think of it this way: if the trade is looking good and I enter off a logical position, it shouldn't move that much against me. If I, for example, place it above the previous swing high and that gets taken out, then like the trade isn't that good anymore. And it's the same with if you get like, if you have to struggle against the market, if you feel like it's never moving in your direction and you've been in the trade for a long time, then you suddenly, let's say you're sitting short in the position, and then you suddenly see the market spike quickly up and you've already been in the trade for like 45 minutes, then that in itself gives you an indication that you should probably close this trade. It's not looking that good. Because when the market agrees with you, you don't have to think about it. You don't have to think, should I close this position? Is this going to work? It just moves in your favor. That's how it works. After retesting your stop loss or going a bit against you and then moving lower, it shouldn't then go chop around, then move aggressively up. Like, then you know you should close the position, and you shouldn't even wait for your full stop loss to hit. You should close earlier so that the market doesn't have the ability to take a lot of money from you. That's how you protect your capital and you keep your losses small and your wins high, especially if you have a high frequency trading system where you trade multiple times a week. Then the way to do this is because you probably have lower risk reward. You don't always have that 1 to 4, 1 to 5, or even 1 to 3. If you have 1 to 2 or sometimes lower, the only way to survive and be profitable long term is to not lose 1% every single time. You have to lose less. Let's say 0.5, 0.25, break even. That's how you survive in this game. That's how you actually increase the risk reward, because you don't risk 1%. Maybe you risk 0.5 and it would be a 1 to 2, but now it's a 1 to 4 because the risk is lowered. So you see that, guys, that's how you have to operate in this game. If you're interested in how I trade, my strategy, and being mentored by me, there's a Discord link in the bio where I go over live market analysis every single day, London session, New York session, and I try to tell you what to be looking for, which days are high probability and which days you should be careful or stay out of the market. And I give you certain moves, and basically I tell you how structure is, what the trend is, everything about that. So, but if you enjoy this video, please keep watching, subscribe to the channel, and I'll see you in the next video tomorrow. Good luck, guys. I really believe you can do this, and see you soon.